Hello and welcome to ET Catalyse Unicorn Diaries. I'm Maloni. India is the world's third largest fintech market behind only the US and China. The sector boasts of over 20 unicorns, and we are going to speak with the CMO of one of these unicorns today, just to get a sense of their journey, the highs, the lows, and how they see the future. I have with me Karanpreet Bindra, Chief Marketing Officer of Yubi, formerly known as CredAvenue. In his current role, Karanpreet oversees the entire gamut of digital, product, PR comms, and brand marketing at Yubi for enterprise and B2C businesses globally. Prior to Yubi, Karanpreet was head of marketing Group Peak, which is an asset-backed consumer lending fintech. He was also associated with Marico, the consumer goods company, for nearly 7 years. Karanpreet, welcome to ET Catalyze. Very good to have you with us.
Thank you so much, Meloni. It's my pleasure to be here. Thanks for having me on the show.
All right, so to get started, Yubi, formerly CredAvenue, emerged as one of the fastest fintech companies to become a unicorn in India, taking 18 months from inception to touch 1.3 billion in valuation. Yubi is a debt marketplace. It's a platform that connects those seeking loans, be it companies or individuals, to those offering loans, like banks and non-banking entities. And there is a good portfolio of products and of customers. How's the journey been so far? And over the last year, what are your big learnings?
I think it's been truly an exhilarating journey. And when we talk about investors' confidence, the unicorn journey is nothing but just the confidence of the investors and the markets, larger markets in general. But that we still consider as a vanity metric, in a way. The real excitement is actually to build a business which can benefit the nation in the short, medium, and the long run. Because we are here not just to build a startup, we are here to build an institution, which is going to outlast all of us. It'll last probably decades, and that's how we think. That's how we always imagined it to be. We think 50 years down the line, how will this look like? And it cannot happen in isolation. It will happen only when we are, very closely knit with the goals of human empowerment through what we do. So there's a very strong purpose behind what we do, and that keeps us going. Every day when we wake up, there's an excitement that what are we gonna add to the journey of making the lives of humans better, which keeps us going. So that journey has been phenomenal in terms of growing our team from pretty much the first member in the marketing org to now close to 30 members. But that's just limited to marketing. If you look at the overall business view, we are close to 1,000 plus A plus folks on board now, with a healthy mix of representation from all the genders. So the journey has been phenomenal. We have been growing businesses. We've been acquiring businesses in the journey. So now at a group level, we are 3 companies. Within Yubi, we have 6 product lines now, which pretty much operate like their own company in a way. So all in all, already at around 8 companies, 1,000 plus people, and an organization which is actually generating revenues and not just believing in, utilizing capital to grow. I mean, we are utilizing, but the idea is to build a profitable business which lasts us all, and that's what keeps us going. So very exciting journey. Very happy so far with the way we have progressed. And yes, I think the valuation and all is great to know, but for us, it's just one of the metrics we are chasing.
Right, so you're driven by purpose, want to build an institution which will outlast everyone, and also, as you say, the unicorn tag is but a vanity metric, and UV is here for the long run. You have a few debt products, right? Like, and you mentioned that there are 6 lines, which include the lending marketplace, supply chain financing, the digital lending platform, and also now the dedicated real estate and infrastructure financing solution. Can you talk to us about these differentiators and their role in creating the enabling ecosystem?
So before I talk about all these 8 platforms in particular, like in general, what UB is trying to solve for is for the information asymmetry and the the markets wherein there's a 80-20 problem. So what happens today is that all the banks want to fund the companies which are already probably not much in need of funds, right? So, but the remaining 80%, which are actually in need of funds, and they don't probably have the right documentation, or even if they do, it's not properly structured, and thus, the decision making or underwriting process is not in favor of them, is the larger problem which we are trying to solve. Now, each of the platforms comes into picture and plays a part of the role in addressing this problem. So when we talk about UB loans, which is one of the platforms which we have, there the problem statement is very clear. This is where we provide loans to enterprises, primarily for growth reasons. One may want to expand to more geographies. One may want to add more product lines and thus set up a factory. And there are almost like 12, 13 products within this particular product itself, right? There, our goal is to enable faster credit. So currently the cycles are, it takes up to 4 to 6 months to raise corporate debt. We are trying to cut the process down to pretty much 60 days to begin with. And obviously, when we think in decades, but we want to pretty much make it a one-click process in the years to come. It's a long journey. It's a long, arduous journey, but we are building every day towards getting there. So that's one of the platforms which caters to organizations as small as a 3 crore annual revenue, goes all the way to listed companies, including the biggest names in the industry today in India, right? Then we have a supply chain finance platform called UB Flow. So what UB Flow does is primarily, optimizes the cash flow of the organizations by providing working capital solutions. So this can be both on the vendor side or on the dealer distributor side. So we have an anchor model where, key anchor companies which have requirements both at the dealer as well as the vendor level, we kind of build that ecosystem for them utilizing technology. So again, what we bring to the table is that we cut down the process of the time taken, in the process. Number one, we enable a better price discovery, which means that today you may have to go to bank by bank to find out what's the best deal for you. But what the platform does is that in one shot, you raise, a requirement, or you create a transaction deal. There will be multiple expression of interest from banks across the country, banks and other lending institutions across the country. So that's a big problem which we are solving, which is enabling not just access to credit, but access to credit at the right price and at the right time. So this is what our second platform does. And I'll probably just spend a few seconds each on the other platform as well. So we have UB Invest, which is another way to raise money through corporate bonds and many other fixed income products. So that's the focus there. But the vision here is that the entire fixed income space in India, which is fairly underdeveloped in India compared to other markets, we want to drive more participation from a larger audience, which is currently limited to just B2B, but we are bringing in the B2B2C place, into the picture, which will then expand and deepen the markets, which is our goal.
You touched upon this entire idea of deepening, of providing vision and just visibility to products, to services, to people who are there to offer loans, and to people, those who want those loans. Structurally, policies have been put in place, to bring about more liquidity into the debt market, bring the depth into them. But of course, there's a long way to go. You spoke of information asymmetry, bringing in greater transparency and all of that. The government has recently introduced some new rules which could impact the growth potential of the market. At a time when you're attempting to improve access to debt products and broad base them, what sort of an impact do you see these rules as having?
We actually we really welcome the move by the RBI to actually bring in more transparency, customer, grievance addressal and other things, which is pretty much in line with how we think. Because the deepening of debt markets will only happen when people feel confident and there's a larger participation from retail as well into deepening debt markets. So our point of view, while it's a little too premature because that policy is still under review, is that it's a welcome move, which will instill more confidence into retail borrowers, and in fact, giving prudent debt is one of our key mission as well. It's not just about getting access to debt, but getting access to prudent debt. So we want anybody who's getting into it to take a very well-informed decision, very prudent decision. And in fact, we are working on ensuring that we provide as many variables as possible for that decision making to happen in a way which is securing their future and they know what they are getting into. We see a lot of platforms out there today, and I don't want to name them, which are not truly explaining the risk behind the investments which are being proposed, which is it's a risky situation, right? Because ultimately it's a household saving which a person has done, and if we are not clear on chasing a return but not knowing the risk behind it, it's not something which is in line with nation building agenda which we have. So we want the more participation, but we want more informed participation. So we will take it on ourselves to educate the market with the right data, with the right amount of education series. We are building stuff around that, so that India participates in deepening debt markets, but in a very, very well-informed manner and in a prudent manner.
Yeah, but do you see a lot of this education happening for what? Tier 1, Tier 2, Tier 3? How are you setting up out the blocks here?
See, currently, if we see, there's a big skew towards Tier 1 cities, of course, because financial education in itself, even if we have education overall, but the financial education, especially personal finance, is not a subject which is really taught to people in school or college. It's something people learn either through their friend circle or peer group or out of sheer interest. So it'll start with Tier 1, but in order to truly deepen the markets, we have to go to Tier 2 and Tier 3, which is where the vernacular piece comes into picture. In fact, as we speak, we are doing our first Kannada demo in Bangalore with a set of small enterprises who are probably not as well versed in English, right? So we are taking those baby steps to ensure that whatever content we create, is reaching the masses. And for that, if we need to translate them into the language they understand, we will do that. We have started doing that in Gujarat. We have started with baby steps in Karnataka. The first port of call is, of course, Tier 1 cities, but I think the mass lies in Tier 2.
So also help me understand that, right now, of course, a lot of your customers are corporates and enterprises, but could you give us some sense of the breakdown of, what the offtake is like for Tier 2, Tier 3 at all, in any of the product categories you feel worth mentioning?
Sure. No, that's a great question. In fact, we are seeing, just to give you a broad percentage, right? Almost, if we talk about 35 to 40% of the enterprises which we are helping raise debt are not really based out of, Tier 1 metros. So we are helping, we are helping companies in, right from, Jalandhar to, many other cities over there, or Coimbatore, the textile industry in Coimbatore. So a significant chunk of our business right now, and even in the future, will actually come from those towns where the access is also not as good as the cities, right? So that's a pretty much a very important part of our go-to-market strategy, which is already showing results, because now in the age of internet, and probably we can talk a little more about how we acquire customers. So anyone who is online and has a requirement, we have the network protocol and operating system to support them. So yeah, close to 35 to 40% of our current enterprise customers are beyond the top 4 metros.
And you mentioned the collection piece, right, earlier, and of course it's strengthened with Octo. How, if you had to do comparison for collection, did you have any numbers on Tier 2 versus Tier 1? versus tier 3?
So for the collection side, I would refrain from actually quoting a number today,
Right.
but
Sure.
I'll give you a very interesting piece, right? So recently, we were in touch with a very big public sector bank.
Hmm.
So there is a agri loan segment, right, which is a
Hmm.
massive government PSU-led initiative. Uh, we actually that we our product called Kisan Pay
Right.
from Spocto is actually helping people at the very, what do you say, the bottom of the pyramid, the farmers who are pretty much marginalized. Even them, when they get a loan from the government through the public sector banks, uh, our collection engine is actually working with them also in their language. So to tell you a little more about this product, right? So Spocto currently we are already in around 20 to 25 languages,
Right.
uh, right? So and I'm talking about a very small town of around 200 kilometers of Pune. Is where we have some customers come up and tell us about how their quality of life has improved because of timely in the right language reminders for their loans, and thus they've been able to avoid any collection agency talking to them in the way they should not be talking, uh,
Right.
and help them maintain their CIBIL scores and their credit scores in the right way. So that penetration is actually very high, actually more than 50%. If you That split pretty much is in line with the loan books of the banks. So there is no there's no metro bias at all. So right from a small farmer in rural Maharashtra is a customer which we are helping live a better life. And I would say, again, more than 60-70% of the accounts which we have are beyond metros.
Yeah, this is all very interesting to know, and we'd like to continue. But I want to focus on marketing. For a new kid on the block, UB has seen very impressive growth in the space, and in a short span of time. What are some of the marketing practices that you think have been key to your success?
Sure. See, one of the key pieces when we started out building the whole marketing org function and strategy was that, see, this is primarily a B2B business to begin with, right? While we are
Mm.
also opening up many B2B2C and B2C businesses as we speak. Uh, Here, the primary difference between a consumer goods business, which is very mass market in nature, right? This is the business of getting into depth rather than width. So in a B2C business, you may have 5, 10 consumer personas. Here we already have close to or more than 100 personas. Uh, so getting deeper and starting with research is, I think, was the step one. Maybe try to step into the shoes of more than 100 different kind of personalities, right? And then the kind of marketing mix we developed,
Mm.
it's a very well balanced mix of building brand, which typically takes a backseat in B2B businesses, but we have gone
Right.
with brand building as a key tenet, right? Then a lot of inbound interest through public relations and corporate communication has been again a big pillar for us, because we believe that we can tell people what we do, but if the media tells people what we do, the the imagery and the reception is far more better. And there are so many stories which were to be told, but people just didn't know about it. So when we package them well, and align it with brand and generate the awareness with the right audience. Once that happens, we have a very strong demand generation and digital marketing group, which actually tries to acquire these customers across mediums. It's not limited to just digital. We
Right.
have video, audio, print, advertising, and a very strong digital engine, which is generating leads at a very, I mean, I can't tell the numbers, but at a very, very comfortable cost, which makes us a very prudent business.
But currently the environment right now, the funding environment is very, very different, right? Like all companies which are operating within the fintech ecosystem, know that things have changed. High inflation, markets are not performing so well. Money is tight. uh, and this impacts marketing. So, how do you see yourself gearing up for, say, riding this out, say, next 6 months, a year or two, especially when it comes to marketing?
Well, that's a great question, and a philosophical one on that, because it comes to how we view marketing, as a function. So for us, we've been very clear that it's a whatever we are doing is an investment, and each investment may have a short term, medium term, and long term, return in place, which is very clearly measured per se. So yes, the environment is tough. Yes, we need to be very smart about how we spend. But the good news is that we have always been smart about how we spend. So no, not just because the philosophy is not just because we have money in the bank that we go out and spend it out there. If you're taking steps which are very measurable, very objective driven from day one. So when we are in a situation when we say, okay, are we meeting our unit economics goals? Are we meeting our customer acquisition cost goal for us to be in a healthy shape? And that we were always in that process and improving quarter on quarter. In terms of certain investments, like going very heavy in terms of pure brand building, is something we have relooked at in a very prudent manner. Of course, we also believe it's very smart to go against the grain a lot of times. See, when the decibel levels are lower in the market, and then when you go out there and build the brand, that actually pays far more dividends, because your efficiencies are very high. So we feel that someone who had been prudent from the beginning and has had planned for a funding winter to come and then decibel levels go down, which is what we have been aware of and kind of predicted in a way, while there's no prediction of when. But our philosophy right now is that we will continue to be prudent, but we will continue to invest and probably even over-invest because the decibel levels are low and the returns are high.
See, every brand, wants to be distinctive. It wants to be disruptive. So I want to understand, how does the rebranding from CredAvenue to UB align with the larger future aspirations of the company?
I'll tell you a couple of reasons. Number one, why do companies actually rebrand, right? If you look at it, in my understanding, almost close to like an 80-20 again. A lot of rebrands happen because one needs to refresh the brand because there's a stagnancy that has happened, right? In our case, we went against the grain and we said we are already doing very well. We are already a rocket ship, and it's a big challenge to actually rebrand a rocket ship, right? Because a lot of moving variables. But it comes down to vision. So in our case, the vision which we have is to be the de facto operating system for debt in the world, right? Now, to do that, we needed a name which is actually living the mission which we have. So if you look at CredAvenue, right, it's kind of restrictive in nature because then it's only about avenues for credit, right? But UB, which is actually a derivation from ubiquitous, which is what we want to be in the financial services, in the debt ecosystem, and we are the invisible layer that is powering, the entire ecosystem. That's one, and then the other is the UB part, which is where the human potential comes into picture, because we sincerely believe that access to capital is going to sorry, is going to improve the quality of life. Is going to power enterprises, which will power people ultimately. So with these two things in mind, we felt that the time is actually perfect to make the change sooner than later. Because then every day, like I said, we are reminded of our vision and mission that, to be ubiquitous.
Okay, as you attempt to establish yourself as a leader in powering the debt ecosystem in India and other parts across the world, we wish you all the best, as you also attempt to increase the efficiencies across the value chain. Karanpreet Bindra, thank you so very much for your time.